This is Fintech Insider News. This week, NatWest Boxed has secured the AA as its first client, HSBC Innovation Banking has invested in Clearscore, and Galileo is introducing co-branded debit rewards to the hospitality sector. We'll be discussing all of this and more on today's show, so don't go anywhere.
This episode is brought to you by Audi. The road is calling. Embrace the thrill of the drive with the all-new, fully electric Audi Q6 e-tron. Featuring effortless power, serious acceleration, and advanced Audi tech. It's not just a new EV, it's a new way to experience driving. The all-new, fully electric Audi Q6 e-tron is here. The next chapter of Audi starts now.
It's back. The 2025 edition of our annual Pulse Report, where we unveil and break down the best user experience financial services has to offer, is out now. Our experts have been busy researching and analysing product experiences from every corner of financial services, from crypto to inclusive design. Find out who were named our Pulse Stars, the best of the best from 2024. Read our highlights from the state of UX in the industry. And discover the bold predictions that our experts have made for the year ahead. Visit 11fs.com/report to download your copy.
Hello and welcome to episode 941 of Fintech Insider. I'm Laura Watkins, Director of Media and Marketing at 11FS. This episode is dropping just hours after the Oscars, Hollywood's biggest night where the world celebrates the best in film. But while the red carpets are rolling up and the after parties are winding down, we're here to talk about something way more exciting, the biggest stories in fintech and financial services over the last week. And to do so, I'm joined by a panel of fintech A-listers. First up on this week's pod, we have my 11FS colleague and co-host, Ross Gallagher, Head of Ventures at 11FS. How are you, Ross?
Well, I'm all the better for being called a fintech A-lister.
It's good,
I might take that away now. It's great to be here, Laura. Thanks for having me. I'm looking forward to the show.
Absolutely. Next up, we have a Fintech Insider debut for Tom Bentley, Head of Growth at NatWest Boxed. Great to have you with us, Tom. You have some exciting news that we'll get to soon. But in the meantime, please tell the listeners a little bit about yourself and NatWest Boxed.
Well, thank you so much for rolling out the red carpet. I had to get another Oscar pun in there.
Appreciate it.
Lovely to be on the pod to talk about some good news. So look, I'm Tom Bentley. I'm the Head of Growth here at NatWest Boxed and been here from the beginning of its inception. My role is essentially working with all our clients and teams to sort of build the venture from the beginning. My background is very much in embedded finance, working with Ladino before. Big fan of the show, so thank you very much for having me.
No, it's great to have you here. And we're going to dig more into that embedded finance topic very soon. And last but not least, we have a welcome return to the pod for Raquel Suarez, Director of Marketing and Communications at Edenred Payment Solutions. Great to have you back on the podcast. How are you doing? And please remind the listeners of Edenred and your role.
Yes, absolutely. Thank you so much for having me. It's great to be back. And I'm actually super excited about the Oscars because I'm a Brazilian and Brazil has 3 nominations at the Oscars this year. So the whole country is extremely excited for this event. So I'm the Director of Marketing at Edenred Payment Solutions, and we work with fintechs and brands, helping them launch financial products, but also embed financial services into their customer journeys. So very excited to be back and getting to the conversation.
Brilliant. Well, yeah, it's great to have you with us. I think, your expertise is going to be vital to what we're talking about today. So let's get started, shall we? Our first story this week, NatWest Boxed partners with the AA to expand access to loans and savings. The embedded finance platform has secured its first customer and teamed up with the AA, who, for our listeners around the globe who might not know who they are, is a British motoring organisation offering breakdown assistance, insurance and other vehicle-related services. Starting next month, AA customers can open instant access savings account with unsecured personal loans coming soon after. The partnership promises an easy application process FSCS protected savings account and optimize loan rates with quick access to funds. This move allows the AA to enhance its financial offerings, giving customers more control over their finances, whether they're saving for driving lessons or handling emergency repairs. And this is just the start of a broader plan with more financial products expected as the AA expands its embedded finance solutions with NatWest Boxed support. Tom, makes sense to come to you first. Hopefully I got all the details right there. Congratulations on this partnership. What more can you tell our listeners about it?
No, thanks so much. Look, it's great to get the news out there finally. And look, maybe just a little bit about NatWest Boxed, because I didn't get a chance to do the intro. So hopefully many people know NatWest as, one of the largest banks here in the UK. And for the global listeners, we bank around 90 million customers here with a huge presence across lots of different brands, all the way from wealth to corporate institutional. And essentially, Boxed is the embedded finance arm of NatWest Group, which was essentially created to really help many of our customers expand their sort of financial offerings, leveraging the balance sheet of the group, which is fantastic, but also the expertise we have coming from the banking lens. But what's really exciting about this partnership is, essentially, the AA is seen as the fourth emergency service. You mentioned there, as an automobile association, it's there for people in need. And over the history of the AA, it's kind of delved into sort of different areas, including financial services. What's really exciting about this partnership is this is sort of the AA looking at that next chapter of its evolution. So beyond offering loans and savings, really looking at how does it improve the financial life of its members, whether that be saving for their first driving lessons, which as many of you may remember, can get very expensive very quickly, especially if you fail a couple of times, like myself, all the way to sort of looking for dream cars and, all the things that come with, looking at sort of the future of, the way you kind of plan for that next car, that next move. What's really exciting here is that, for me, there's not a huge amount of references around very large brands in the UK stepping into embedded finance. I really believe this partnership is very unique in that, it's a big brand really working with a big bank to bring some really compelling propositions together. And yeah, we're over the moon. So it's great to finally have the news out there.
Yeah, absolutely. Congratulations. And as you say, kind of two enormous kind of institutions of the UK working together. I think that's, just a really nice kind of moment for the industry. Russ, what was your kind of take on this when you saw the announcement?
Yeah, well, Tom, look, first of all, I'd have to say congratulations. I think it's no small feat to be able to expose those capabilities, everything that you mentioned about the balance sheet. And so I think that has to be the first thing that we say. I mean, the effort and everything that goes into that, I think, has to be acknowledged. And then secondly, I suppose my reaction exactly is, I think you hit the nail on the head, Tom, which is no surprise in terms of the opportunities now to build out, or maybe rethink the types of propositions that you can then bring to market through this type of proposition, right? And it's easy to think of financial services almost as a vertical, but actually this makes it much more of a horizontal, right? It gives it there's the real opportunity now to sort of have that underpin some really actually bespoke, tailored customer propositions and actually really make a difference in the lives of those customers. So I think it's a really interesting move. And again, I mean, when you look at the scale, the size of the customer base for NatWest, the size of the customer base for DAA, I mean, the potential here from a scale perspective as well is also really exciting.
Oh, thanks, Ross. That's really kind words. And look, for me, it's been a difficult journey somewhat in embedded finance. You had a lot of promise, and you guys have covered it on the show. I'm sure that, some entities have gone through quite a few difficulty. I think what's really exciting for me here, this is a really good news story around the promise of what embedded finance can be. And it was a huge team effort on everyone's part from both sides. I think that, to come back to some of your comments, for me, my favorite definition of embedded finance, that it's about solving a customer need at a particular point in a customer journey, whether that is breaking down or in the context of this, but looking further afield, really taking banking places where it hasn't been. So I think the potential is really exciting, but ultimately, the main thing for me looking forward is not just stopping at kind of simple loans and savings, which is obviously what, the release and kind of the first part of this is about. But obviously, I'm really excited to see where that organization takes sort of, these propositions and how they kind of promote that to their members.
Yeah. And as you both mentioned, there's a lot of members there. So like the opportunity to do something hugely impactful is enormous. Raquel, let's bring you in here. Obviously, you're kind of deep in the embedded finance space, kind of thinking about the sort of the trust element here. Obviously, the AA is a massively well-respected brand in the UK. It has a Trustpilot score of 4.6. How important is that kind of trust relationship for a non-financial services provider to start offering financial services?
Yeah, it's huge. It's huge because many brands have had those relationships for decades. Some people have inherited that relationship from their parents, right? And then it's important to leverage that because you ultimately know that customer probably better than other businesses around and some financial institutions. And why not help them exactly when they need it, right? So it's really taking ownership more of that journey and providing some added value, especially when people need it the most. And I love the fact, and by the way, congratulations also from us, because that really just helps the entire industry, because we hear it a lot about it, embedded finance, and yet it seems like it's still trying to find its way into like the masses, especially because some businesses, especially non-brands, are very quick to drop it as soon as it becomes too hard. And then you lose that sponsor at the top and then the whole thing crumbles. And then all of a sudden it's like, oh, we just want to focus on our core business. And it's a shame, right? Because in the end of the day, customers and users are the ones most impacted because they don't get the services that they would benefit. So I agree that trust is huge, and it's definitely a huge benefit for brands to capitalize on, but really thinking of what does the customer really, really need ultimately.
No, definitely. I mean, look, there's so many great businesses trying to tackle this problem across so many different areas. I mean, there's like endless kind of use cases you can call to. But the thing that really excites me, I really hope this is like the spark in the barrel from organizations to take it seriously. I mean, of course, you could argue embedded finance has been around a huge amount of time in terms of that checkout experience. So you look at what other organizations have done to really bring that to life. But I feel this is really, for us, what we're very proud of is that member base, that historical context of that organization, how they're looking to the future. And really, in terms of that sort of wider narrative and looking globally, it's great now to have a really solid UK reference. Whenever I've sort of seen slides from consultants, they're very sort of US centric around the Starbucks and Ubers of this world. Obviously, we can't wait to get these services live in the hands of customers and to hopefully come back and talk about superstar volumes and things around this and then engaging that member base. And, both teams are working really hard to make sure it's a fantastic go-to-market proposition. But I'm really hopeful that, it's going to be a sort of flag with a UK entity very firmly planted on, consultancy slides for years to come, hopefully.
Ross, as a consultant yourself and nodding along there, what's your take on that kind of planting the flag for a fantastic UK use case?
No, I think it's really, really important, both for embedded finance, but then, there's an awful lot of debate at the moment around, the UK has always been this sort of recognized leader in fintech more broadly. And, when you look at some of the big brands that are now choosing to sort of IPO and doing that in other markets and all of that sort of stuff, is the UK losing a march there? So I think definitely these types of use cases that we can point to, and in a space like embedded finance, I think really, really is important, in terms of like reinforcing the UK's position within that sort of at that top table when it comes to fintech and innovation. And I think just to go back to the point on trust, which I think is an interesting one, right, in the context of what we're talking about. And I think particularly when you look at the types of products that we're talking about, savings, lending, I think trust is a major factor, right? You know, if you're going to be talking about where I'm gonna put my savings, where my emergency fund is going to be if something goes wrong, like blah blah blah, whatever that looks like, then I think it's really important that that you have that brand trust. But then I think the next level, you know, in terms of the types of more bespoke propositions that we've talked about that sort of build out from there, and the education that wraps around that. Again, I think that trust point is really, really important, because we've talked at this show at length about the shortfalls when it comes to financial education, financial literacy, and everything that we're talking about in terms of meeting customers where they are with these types of embedded propositions, them being contextualized within you know, what it is that the customer is trying to achieve in that moment. That gives you a really strong platform, I think, for education as well. I think it's going to be really important.
No, definitely. And I'll just add one dimension and agree with all of that, Ross. I think understanding at what point you are injecting that service or what that journey looks like that actually feels authentic. I mean, how many times have you been in an embedded finance journey and suddenly you're in a, you know, white labeled, very different sort of use case that has nothing to do with the brand journey that where you originally were orientated? So I think being able to do that as, you know, a sort of platform and supply is really, really key in kind of making embedded finance tick. But also it comes back to, you know, the very strong principles around regulation and compliance. You know, we're very fortunate as, you know, the tier one organization supporting 19 million customers. We're doing that on a daily basis, you know, at the most critical level. So the ability to take those learnings that we're learning across those data sets, obviously working with the regulators, and then industrialize that into compelling propositions that really work, that you can trust. I think that's the magic sauce, right, in terms of these partnerships, and why hopefully you'll see more of these come together.
Well, we could probably pick your brains on this for the rest of the show, but we mustn't. So we will wrap up here by just saying congratulations again. And when this is all live and up and running, please do come back and tell us more about it. But I'm going to move us on to our next story, which is that Affirm has partnered with Shopify and becomes their exclusive pay over time provider in the US and Canada. The story was in the Fintech Times. Affirm has renewed its partnership with Shopify to remain the exclusive pay over time provider for Shop Pay Instalments in the US. The partnership is now also extending to Canada, with plans to expand further, including into the UK. Eligible Shopify merchants can offer customers bi-weekly and monthly installment plans with 0% APR options and no hidden fees. The article points out that this could make BNPL even more accessible for shoppers across North America. Ross, what do you think of this one? What's kind of the main benefits for merchants in being able to offer BNPL services to their customers, and kind of what's the risk factor there as well?
Yeah, I mean, you know, I think you take a brand like Affirm and you put it together with a brand like Shopify, that's going to get headlines, right? You know, that is, you talked at the top about A-listers. Well, that's certainly a you know, sort of two A-lister brands. And look, it makes sense, obviously, from both sides. I mean, you know, we're still talking about embedded finance, right? Which is great. I expect it's going to be a theme as we go through, right? But I like Affirm. And the reason that I like Affirm is because, aside from being sort of like founded by Max Levchin, you know, another successful member of the PayPal mafia alongside his old pals Elon Musk and Peter Thiel and all of these guys, what I like about it is he'd exited from PayPal, you know, multi-millionaire, but yet couldn't get, I think it was finance on a car. And so kind of went, well, gosh, if I can't get finance on a car, and you know, there's probably a whole heap of other people out there that can do the same. And so went about solving the problem, applied technology. You know, that this isn't about the sort of like static, sort of like lagging typical credit score that you sort of, you know, whatever, it's, they use hundreds of data points to really get an accurate sense on affordability. And so and affordability in real time. So it really solves a problem for customers. And so that's the upside. But of course, then the downside of the potential risk is it necessarily right for consumers? And I suppose that's always been the debate that we've always had, particularly around these sort of these sort of embedded checkout payment providers. It's easy to sell to the merchants because, they have data that says, there's more completes when it comes to checkout. There's less abandoned baskets, and typically, over time, the average size of those baskets goes up as well. So, it makes sense for someone like Shopify from the retailer perspective. It makes sense for Affirm. The question mark has always been over the consumer impact, and I think that's still there.
Absolutely. And on your kind of A-listers point, Raquel, with your kind of marketer's hat on, how well do you think this kind of partnership gives Affirm a competitive advantage over competitors such as like Klarna, Afterpay? I would say maybe as a sample of one, but for me in the UK, like I feel like Klarna is like the name for buy now, pay later. Does something like this kind of give Affirm a bit of an advantage on the map against someone like Klarna?
I'm not exactly sure, to be honest, because at this point, Klarna has invested so much into the UK and the European market with lots of campaigns, working with a lot of retailers. So Affirm, I know they exist, obviously, but at the same time, as a consumer, it's a completely new thing to me, at least a consumer here in the UK. And actually, I have a bit of a contrarian view on this because obviously we, as a business, we do support other businesses wanting to launch a BNPL solution. But as a consumer, sometimes I struggle, especially when I think about how people manage their finances. If you use multiple different BNPL providers to pay for your shopping, at some point it's really hard to keep track of all your different payments that you have to make. And that gets really overwhelming over time, especially when people are not really very good at managing their finances, right? And for example, what I love is the BNPL solution. Well, it's not really BNPL solutions by Monzo, where you can technically pay in installments with your card, with your Monzo card, but it's all in one. So you know exactly all the different payments that you have in one. And I think Klarna does it to a certain extent, but is as a standalone thing. You still need to go and then pay into your Klarna account. And so I don't have the best answer for this, in my opinion, but I do think it's going to be not super easy for Affirm, even if they have this partnership with Shopify that obviously is a huge distribution channel for them to get more people to use the platform.
Yeah, I mean, and it is, but they're also kind of powering the like Shop Pay kind of product. So there's already a name for it, and Affirm are kind of attaching their name to it. So from a kind of brand awareness perspective, they may get a little bit hidden behind the like Shopify's existing branding. And to be fair, like Shopify has 2 million merchants, but the majority of them are in the US. So like their kind of push into the UK in terms of sort of market dominance may be held up by the fact that most of Shopify's merchants are in the US in the first place. Tom, what were your thoughts on this? Kind of does these kind of partnerships reinforce buy now, pay later as kind of a permanent part of online shopping? I know we're kind of still waiting for clarity on regulation and that sort of thing, but like this is not going away as an option for consumers. And so, how should we feel about that overall this time? Is this a good thing? What do you think?
No, so we actually did a study with BCG around this, and look, it was very obviously the sort of star category winner in terms of people who use the service, in terms of that consumer retail journey, which obviously Shopify is a master of. But I've always seen, and apologies to use a car pun again, but I see BNPL a little bit like a provisional driving license, in that it's kind of people's first kind of experience with that embedded finance. However, I think what part of the survey that we did said something like half of the people who go through that journey under a certain age didn't understand the concept of the late payment fees, and that switches into sort of an interest-bearing loan if you miss one of those payments. So again, that education piece is going to be key. I mean, I think, look, to answer your question very specifically, I think all the better that, there's more options to the consumer. I have two main concerns. One is sort of that transparency around fees, and obviously the Woodson report, what's coming next year. We could spend another hour talking about that, but very clearly there's going to be a lot of tighter regulation. And I think the second thing is just being authentic and transparent on those fees and that servicing. I think I call it the Snoop Dogg era, but when there used to be all the Snoop Dogg kind of Klarna adverts are everywhere. The volume of people using those services and sort of interacting with them. I think a lot of people didn't understand the sort of T's and C's that sat against that. I think, there's absolutely, it's going to be the category. It's absolutely something that all merchants need to kind of consider and think about, especially at that higher end of the table where you're stretching spend. The key thing is, can I really afford this? And ultimately, what are the consequences if I can't keep up payments? And making that crystal clear for consumers is really key.
Yeah, absolutely. I guess that's the kind of the thing to balance with embedded finance. You want to make it as seamless and as frictionless as possible, but with the right checks and balances in place that customers actually know what they're doing, right? I imagine that must be quite a fine line to tread. And probably no surprise that people are kind of gunning for regulation to kind of help them put some guardrails around that. In the UK, we're apparently promised an announcement from the FCA to finalise their rules by 2026. So there's still a good year or so to go before we get there. Ross, what's your thoughts on kind of the consumer protections here?
Yeah, I go back to, I suppose, the point that I made at the top. I mean, Tom's exactly right in the, the result of this is more choice for consumers. I think when you take that to the extreme, and we've seen some of the online checkout pages with dozens of options for pay in installments and whatever else, it gets a little bit overwhelming. But more choice is a good thing. But there are inherent risks. There are the risk of exactly what Raquel said, which I think is such an important point. If you've got these because they are debts, let's just call them what they are, sat across lots of different pay later providers, then it does become much more difficult to keep track of them, and it does increase the risk that you might miss a payment, which is going to hit your credit score and all of the negative downsides that come with that. So I think getting the right consumer protections in place, making sure that customers feel empowered by the options that they have, but equally don't fall foul of those downside risks, as I mentioned. And I think it's in everybody's interest to have clearer regulation. Klarna have been pushing really hard for regulation from the FCA. They know where they stand. Then they know where they can play. They know where they can't. As I say, it's in consumers' interest. Yeah, it's just like any other financial product, right? You need the right checks and balances to make sure that consumers are protected.
Yeah, and I think it is kind of interesting that buy now, pay later was sort of originally kind of vilified as, kind of off limits. They've got no regulation, blah, blah, blah. But as you say, like Klarna have been actively working with the regulators to try and, actually support this regulation. I guess cynically you could say that they could, work that to their advantage, but at least they were engaging with the regulator. We're running out of time slightly on this, but Raquel, I want to give you the last word on this story. Sorry. What were your kind of final thoughts on this?
No, I think it's good. It's good to see, more of these businesses trying to add to the ecosystem coming here. But as I said, I think it's still going to be a bit tough because the market itself is already under some type of transformation because it needs to be more regulated and put more checks and balances, but then maybe new entrants with new ideas of how to manage those payments. So but it's good to see, and let's see what will happen once they come here.
Yeah, absolutely. We will keep an eye on that. Obviously, they're continuing their US partnership. They're extending into Canada and potentially into the UK. But yeah, I mean, obviously from a merchant side, as Ross mentioned, hugely valuable to them for increased sort of sales, essentially, less abandonment, and an even higher price points because people think they can, they can spread the payment out. So it's obviously hugely valuable to the merchants. But yeah, as we said, like, have to keep an eye on how that kind of stacks out for the customers. But on that note, we're just going to take a quick pause here and we'll be back very shortly. Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alika Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
This episode is brought to you by Peacock. The new Peacock original documentary, Matthew Perry, A Hollywood Tragedy, dives deep into the beloved actor's rise to fame and his tragic death. 5 people, including Perry's personal assistant, 2 medical doctors, and an alleged Hollywood drug dealer known as the Ketamine Queen, were charged with conspiracy to illegally provide Perry with the ketamine. Explore the details of the case in this heartbreaking special, streaming now only on Peacock.
Welcome back. Before we return to the news, we wanted to tell you about our latest Insight show. Have you ever wondered exactly what goes into launching a game-changing new product? We assembled a panel of experts from Chip, Wise, and JP Morgan to delve into the intricacies of launching a product designed for millions of customers. It's out now. Just head to the podcast below this one in your feed to listen. Right, back to the news. And our next story is Galileo brings co-brand debit rewards to the hospitality sector. This story in payments. Galileo is the first to bring this type of program, which lets brands give debit users access to rewards which are normally reserved for credit card customers to the US hospitality sector. While co-brand credit reward programs are common, debit users have largely been left out until now. 90% of American adults have a debit card, with 45 million adults either lacking a credit history or have only minimal credit activity, keeping them from earning rewards when buying everyday items or when making big-ticket purchases in hospitality and travel. Galileo says its program will initially focus on the hospitality and travel sectors, letting airlines, hotels, and other brands boost spending and customer engagement by offering loyalty-driven debit cards. To find out more about this, we spoke to David Foyer, who is Galileo's CPO.
Galileo is making co-branded debit programs easier, faster, and more rewarding for brands. What used to take us a year now takes just a few months, so brands can quickly launch a rewards-driven debit program. Think about this. The US debit market is worth $4.3 trillion, and nearly 90% of adults use a debit card. Yet most reward programs skip over these customers, leaving a big gap in engagement. By combining Cyberbank Digital, our digital bank experience platform that came to us by way of our Technisys acquisition, with Galileo's card issuing, processing, fraud protection, program management, and our robust bench of sponsor bank partners, we are able to simplify the process for brands to move at internet speed, not financial services speed. What's more, it opens up rewards to over 46 million US adults who have little or no credit history. These are people who want loyalty perks, but have been otherwise excluded by the system. For brands, especially in hospitality and travel, this is a smart move. It helps you connect with high-value customers and stay ahead in the loyalty market with a financial inclusion play that's projected to hit $44.7 billion by 2029.
There we go. Tom, I want to come to you first on this. What were your thoughts on this? Obviously, there's a lot of data in there about kind of opportunities for debit card users and so on. But what was your take?
Well, for me, I mean, the most amazing about a debit card is it is a product for nearly everyone, certainly a much larger market than credit. So if you heard directly from that quote, there's no very minimal rejection in comparison, which is really interesting. But I think, the thing that really is telling for me is essentially, the businesses that Galileo are targeting drive on data, they drive on loyalty, they want the premium customers, they want to understand the spending patterns. So anything that enables that sort of information to then get, I'm watching White Lotus at the moment. So, to get, the White Lotus sort of customer profile all the way to, the guys who are, heading for a quick break in one of their budget hotels, understanding that landscape. Essentially, this spend would really enable to identify that data, but also, of course, drive that customer retention, which is really key in this space.
Absolutely. And like the hospitality sector, particularly sort of like the Air Miles program and that sort of thing, is like really synonymous with rewards programs anyway. Does this feel like a sort of obvious place to trial something like this?
Yeah, I mean, the heritage of, credit card programs, essentially all about that. I always call it imaginary spend in that, it's imagining the holiday sat on the sort of, flight. And there's many programs now who've adopted that, especially if you look at sort of the success of Amex BA in this space. So it makes, complete sense to me. But, also it's sort of a universal pitch from Galileo's perspective in terms of that market. It's not segmented, again, it's sort of limitless boundaries. And for me, it's all about, that spend, that transactional sort of interchange as well. So obviously, if they're able to kind of enable that from a debit usage, which is obviously used a lot more than necessarily credit, that makes complete sense commercially.
And Ross, what was your take on this kind of statistic where they've said $4 trillion are wasted in debit card spend that doesn't have rewards attached to it? Obviously, it's a very kind of culturally, the US is a market that's particularly attached to reward programs. So it's interesting that they're sort of seeing debit card spending almost as a loss with no rewards attached. What was your thoughts?
Yeah, you're right. There's absolutely a cultural element to this. Yeah, you're right. Look, it's an interesting take to say that $4.3 trillion is wasted. But when you think about it, if that is money spent and there's, consumers are essentially leaving value on the table, then you can understand where they got to it. You're right. Look, the cultural significance of these types of reward programs is huge in the US. It has typically been credit. We're not in the US. They're not as constrained in the way that those interchange fees have been mandated here by the regulator. That's not the case over there, right? So they've got more wriggle room to deliver these more valuable loyalty and reward schemes for consumers, and so it is a core part. But absolutely, I think that has been credit card focused up until now. I think being able to make that available through debit card propositions, I think is definitely a big step forward. David Foyer, when he was talking about it, hit on tapping into sort of financial inclusion. I think that's absolutely right. You're expanding access to these rewards programs to people that up until now haven't been able to access them. And so from that perspective, I think it's a really interesting move. And look, we're still talking about embedded finance. This is a real thread throughout the stories. This week, right? And it is really interesting, right? Because I think in the Tom, your story about NatWest Boxed and the AA, we were talking there about the potential for furthering financial literacy and education. And now we're seeing, a real world example where we're talking about furthering the cause around financial inclusion, right? And these are some really big, like knotty industry problems that we struggled with for a really long time. And so it's interesting to see embedded finance and the sort of upside in that space.
Yeah, definitely, Ross. Just add one thing to that you picked up on. It's not just about chasing the best rates, right? Or the best kind of point advantage. I think it's about all the kind of goodies that come with a proposition where it's got that meaningful value. So, and that's really in terms of where, there's some revenue, margin for organizations, because ultimately you don't necessarily have to offer the best rates or sort of, market leading principles in terms of the financial DNA. However, you can actually offer sort of upgrades, early check-ins as an example in this space that are meaningful to the customer on a daily basis that mean much more than their basis point. So I think that's really where this becomes really exciting in the context of building financial propositions that are really succinct to the customer need.
And that can be tailored to specific industries. I think that's one of the big sort of opportunity spaces here is, Laura, you're exactly right that this feels like an obvious sector to start in, but what does this look like for other adjacent sectors? And, really when you start to think about tailoring those offerings and how far you can take that.
Yeah, I imagine the hospitality sector is probably the canary in the coal mine, only because they're so used to having reward programs anyway. Like, transferring one that already exists for credit card to debit card is probably a lot easier than a sector that maybe doesn't have one at all. Raquel, to bring you in, how kind of impactful are reward programs on things like brand engagement, loyalty, kind of building those relationships with customers? Do they work?
I think so, especially if you do come up with a program that really feels like the consumer is getting something out of it. Sometimes I struggle with some of these cashback offers where you save 1%. In your spending, you go to Pret and then you save 10p on your coffee. No, but seriously, I do think that if you come up with a good program where people can then see some real, benefit from it, by, for example, the Avios program, you can definitely save a lot of money with British Airways if you consistently use the Avios program with their retailers that is part of the programs or other ways. I think it's totally. It's definitely a huge benefit, especially nowadays where the cost of living crisis, where people are definitely trying to see how they can save in their day-to-day life, shopping and bigger expenses. So absolutely, I think it's still very important to have that as part of your programs as a brand, for sure.
Yeah, definitely. And I think the only other point is sort of around, we talked about customer inclusion, which is great, but also like the kind of just financial literacy that goes with it as well. So like just people not, taking too many risks with their spending. Obviously on a credit card, it's a little bit sort of like the same conversation with buy now, pay later, and that you have longer to pay it off. Debit card, you have to be good for it now. Otherwise that's gonna get you in trouble. There's a stat from payments that said that transactions involving debit cards are now 3 times as likely to be declined as those involving credit cards. I mean, presumably that's just, because people aren't good for the cash in the moment. So I think it's like hopefully people not overreaching themselves in order to get the rewards. But, in terms of making those opportunities for customers, I think, it'll be really interesting to see how this takes off and how, sorry for the aviation pun there, and how well this goes going forward. But I'm going to move us on to our next story. Which is coming back to the UK. So HSBC Innovation Banking bets £30 million on Fintech Clearscore. This was in City AM and various other places. HSBC Innovation Banking provides commercial banking services, expertise and insights to emerging innovative businesses. They first partnered with Clearscore in 2017, and Clearscore has said that the continued support of HSBC will help drive further business growth across domestic and international markets. Clearscore has credited the lender for its vital role in its global expansion, quote, with the financial marketplace now hosting over 24 million users across the UK, South Africa, Australia, New Zealand and Canada. And it has long been tipped as a, quote, soonicorn, with it expected to reach the unicorn status of a £1 billion valuation in the near future. Ross, what were your thoughts on this? When I was reading about this story on LinkedIn and various other places, and also in the headlines of how this was portrayed, HSBC Innovation Banking has been very clear that this is growth capital for Clearscore, which I found interesting because obviously we're in a sort of turbulent time for investment. There's down rounds, there's debt funding and so on. How important is this money is specifically aimed at business growth?
I'm going to repeat what I said about Affirm, and then I'm going to try and promise that my analysis is going to get a little bit better. But I like Clearscore.
Okay, nice.
Yeah. And look, the reason that I like it is because I wonder if you asked, 10 people to name the 3 credit score providers in the UK, how many could name, Experian, Equifax, and TransUnion. It would just be an interesting litmus test. And actually, what I think Clearscore has done is, we talked a lot about inclusion and education in the previous stories, but I think what it's done is it's opened up access to understanding the credit score for a lot of people, like really a lot of people. I think they've managed to reach people en masse, and that's no small feat when you're talking about something like credit score, because people don't understand it and they're not necessarily all that likely to engage. And then they've built out from there, right? It's gone from just sort of making that information available to building out, personalized insights and becoming more of a marketplace, and making that conversation with the lender when you're applying for credit a little bit more two-way. It'll give you some insights around how lenders are likely to view you based on your own financial situation. And so I think it's a really, really interesting proposition. The use of the term growth capital, I think, is interesting. There's clearly, innovation banking, they're obviously quite bullish on where this can go, and want to be part of that journey and helping to shape that direction. But yeah, look, I'm all for it. I mean, the more people that you can engage and build their understanding of their credit score, their own financial habits and behaviors and positions, and to improve those things over time, I think can only be a good thing.
Yeah, absolutely. And they've also, in the last week, as well as this funding news, they've also announced that they've set up a partnership with PensionBee, so putting PensionBee services into their credit health, so kind of building on what you've just been saying about giving people access to their credit. But they were also looking at people's future financial health, so not just educating people on where they're at now, but where they might be in the future with PensionBee. So as you were saying, sort of building on that sort of ecosystem of kind of true financial health, not just kind of reporting on where people have got so far, which I think is really interesting. And they've said they are profitable. They are starting to become global. We read out all the geos that they're in. Are these just huge markers of success in this day and age? Tom, what do you think in terms of, having that ecosystem? Profitability is also a huge thing at the moment in terms of that kind of flag of success. What's your thoughts on this?
No, I'm in the Ross camp here in that I really like Clearscore, the way they've gamified, kind of checking your score and taking it to next level. And look, we should celebrate, any partnership that is giving, consumers more visibility of their financial life. And, I shouldn't use a car pun again, but, almost putting you in the driving seat, right, in terms of where you are in your financial life. More and more people who kind of get familiar with that and understand what an additional £20, top up in a pension fund weekly, or, saving, towards a goal, in the same way, when you have these massive life events like the mortgages where, your credit scores do take, hitting, and you want to get back up to that 999 perfection. For me, that's what I really enjoy. The thing that I think is really exciting is that collaborative element of what they're doing. And I think all fintech should follow that in terms of, looking at the services. They do some things really, really well, as I'm sure PensionBee does. So the idea of them using best of breed services and building architecture that allows for that, I think is, nothing but a win-win.
Absolutely. And Rekha, what are your thoughts on this? Obviously, they've said sort of through these partnerships, they're looking to scale at pace and become, sort of to Russ's point about recognizableness of their brand, like one of the UK's leading fintech brands. What do you think?
Yeah, no, I agree. I think we should try and really support these businesses, right? Because as we know, the sector is under a lot of pressure, and it just takes time to build those businesses in a way that it will, yield all these revenue that everyone is hoping to get. And I think it's important to really value those businesses. And again, I'm all for businesses that help, especially vulnerable people, with education around their finances, because it's been, very deprived in that space, and it's good when you take them through that journey of understanding their credit score, but then also helping them improve it, and also make suggestions based on their data, how they can get access to a loan or improve their pension and so on and so forth, because very often some of these vulnerable people are the ones that also don't have access to a lot of this information. So I think it's really important. But as I said, it's a tough one, especially when you are in a business where it's consumer, sort of mostly consumer facing. How do you actually make money, especially when you work with a vulnerable customer base? It's how do you make money, right? And that's what everyone wants to know. And I personally even don't know exactly how Clearscore makes money. I'm guessing through their marketplace with the financial services, but that's one that it's this old idea in the startup world where you start out with this big idea with a beautiful mission, but then at some point you are pressured into, okay, how do you make money after this? And sometimes it doesn't quite work, and then you try and then build something that kind of sits on top, but then where do you go from there, especially when it starts to become extremely competitive as well? So, as I said, I'm excited that they managed to secure this additional fund, and hopefully they will succeed in growing even more so and providing more services.
100%. And it is, it's such a hard time to fundraise in. So, they've done well. I want a very quick word about HSBC, and particularly their potential checkered recent history with fintechs. So particularly, what went down with Monese. They invested 27.8 million in Monese, but then wrote off their stake in October 2024. And then ultimately Monese went on to become acquired by someone else, by Pocket. Russ, how can they kind of avoid doing that with Clearscore? Obviously, they've been invested in Clearscore since 2017. Like, does that relationship already exist? They probably have a little bit more of a deeper knowledge of Clearscore and what Clearscore has to offer. What do you think? How do they avoid having another Monese on their hands?
It's tricky. Look, I think I think the reasons for why Monese went the way that they did were probably quite nuanced and quite specific to Monese. But what I would say is, zooming out slightly, I think HSBC should be commended for backing brands like Monese, again, very much focused on solving, yes, a financial problem, but also a wider societal problem. And I think Clearscore looked very different business, very different model. But again, HSBC getting behind them and as we've all just discussed, I think at great length, there's potentially huge upside from an inclusion perspective, from a literacy and education perspective, and I think that should be the key takeaway.
That's very true. Humor me just for 10 seconds. Can I have a straw poll on people's thoughts on the term Soonicorn? Do we like it? Is it useful as a label? What actually happens if you never become a unicorn and you're just always a Soonicorn? Is that awkward? Like, what do we think? Ross, very quickly. Soonicorn, good or bad?
I'm going to go, it's useful because it does exactly what it says on the tin. I know what it means and I don't have to think about it.
Okay. Tom?
I love unicorns, so anything with the word, unicorn, no. But on a serious note, anything to kind of help security, right? When you're building a business and scaling, being recognized as you're on the path of growth, that's exactly what growth is, right? So I think it can only be helpful.
Raquel?
I think it's a bit tacky. What do you do? How do you call yourself if you've been a unicorn and you're no longer a unicorn? Are you a pasticorn or formicon?
Pasticorn, I like that.
Come on. No, I think unicorn and it's fine.
Yeah. I mean, the thing I felt with a Soonicorn is like, I think it said in the article they have long been known as a Soonicorn. And I'm like, how long is too long? Like, what, are you always the bridesmaid, never the bride? I don't know. But to kind of Ross and Tom's point, it does sort of show that you are tracking towards $1 billion, which actually is quite a nice statement of how healthy your business is without actually having to put any numbers on it. So perhaps depending on the context, Soonicorn can work. And it's obviously certainly a talking point. I've walked into my own trap there. So I'm going to move us on. So now for a quick look at one more news story this week that we didn't have time to cover in full, which is that the SEC will not sue Robinhood over crypto. This story was in TechCrunch. The SEC has closed its investigation into Robinhood's crypto unit without pursuing any further action, following a similar move for Coinbase. The SEC had scrutinized crypto exchanges over staking services, which involve committing crypto assets to support blockchain networks, potentially earning rewards. Under former SEC Chair Gary Gensler, the SEC viewed staking as a security, but crypto exchanges like Robinhood and Coinbase disagreed, arguing that the regulations were unclear. With both Robinhood and Coinbase now in the clear, the crypto industry is pushing for clearer, more stable regulations, especially under the current, more crypto-friendly US administration. Ross, very quickly, what were your thoughts on this?
Yeah, look, this is really complex. Staking is a core part of how these technologies work. And I think trying to take that as a concept and fit it to, well, is it a security or is it some other sort of traditional financial instrument that we've had around for a long time, I think isn't necessarily helpful. I think the SEC now choosing not to pursue further action is indicative of a wider trend now under the Trump administration towards a more crypto-friendly outlook. I think the major issue here is the absence of clear regulation, right, around crypto and how they're viewed by regulators such as the SEC. So, yeah, it's no surprise that the crypto industry are pushing now off the back of this for the creation of that sort of crypto-specific regulation. And as we've talked about regulation earlier on in the show, I think that should be win-win and hopefully prevents these types of issues coming up again.
Well, thank you. And also the mention of the Trump administration sets us up nicely for our, and finally today, which is Trump touts $5 million gold card U.S. residency plans. This was a story in Axios. The Trump administration plans to offer a new gold card program, which would grant permanent U.S. residency to individuals for a $5 million investment. The new system would replace the existing EB-5 program, which has been in place since 1990, offering green cards to individuals who invested in the US. Trump argues the gold card will bring in wealthy individuals, boost the economy, and create jobs by attracting high spenders. With the potential to sell up to 1 million gold cards, the program would allow wealthy individuals to bypass typical residency requirements. What do you guys think? Would you do it? $5 million, a bargain? Is it overpriced? I'm told you apparently have to pay the full upfront in cash, which, maybe limits some of us. Tom, what do you think?
Well, on the spirit of the Oscars, I watched the movie about Trump's younger life, which is called The Apprentice, which is actually a really good movie. But I think, again, it's just the art of the deal, right? Again, from Trump. It's a move to, welcome individuals who are going to have a huge influence on infrastructure investment. So I think it's a smart move. I think, again, it's all about business and it's all about investment.
Yeah, I mean, he's probably not wrong that it will boost the economy, but it does feel like a bit of a cheat, right? You cheat your way into a full residency as long as you have $5 million in cash. Russ, what do you think?
Yeah, I think it's classic Trump, right? This idea isn't new. You look at countries like Switzerland, Spain, Greece, etc. They've all got some variation of this, but what Trump does so well is he almost, announces it as though it's the first time that anybody's ever heard these things. And he's the genius that came up with it and puts his own brand on it. The gold card. I mean, that's in keeping with Trump, isn't it? Everything's gold. His elevator's gold. His toilet is gold. So no,
it's very Austin Powers.
Yeah, very Austin Powers. Yeah, right. Exactly. But, look, I mean, to Tom's point, out of the deal, he's doing what he does. He's running it like a business. He's thinking about how do I maximize return on these investments, all of that sort of stuff. So, and look, to the point about Soonicorn, I get it. this is self-explanatory. It does what it says on the tin. But yeah, very, very Trump.
I would say, you mentioned sort of Switzerland, Spain, Greece, etc., but none of those quite add up to $5 million. So there's a lot of sort of similar programs, but not with that price tag. Raquel, what do you think?
I agree. I feel like Trump is the ultimate marketer, I think. He is very good at repackaging and, repositioning things in such way that it almost feels like it's a new thing, but it really isn't, because it's been around, or it's just been framed in a different way. But also it's about the signals that he's sending, right? In the end of the day, on one hand, he's trying to get rid of the undocumented and illegal and trying to say you're not welcome. But then at the same time, if you have $5 million, you can become a resident, It's about messaging and really trying to make sure that people understand that times, at least in his mind, the times have changed, and this is the new America, that's how I see it. And with regards to 5 million, I mean, if you are rich at that level, 5 million is really nothing, so
No,
it's almost it's almost not much if you're actually rich. So I don't know.
True. What about they want to sell up to 1 million of these gold cards? Does that seem high? I'm not sure. What do you think?
Well, honestly, I think that there must be a market to announce it.
Yeah.
Behind the data. So I think it's tailored for very specific individuals, very specific routes. But let's see. I mean, as you mentioned, lots of different countries offer it. If that is the price of US entry, let's see how they get on.
Yeah, absolutely. And kind of as Raquel said, he is a great marketer. It's saying 1 million is just one big chunky number, which always stands out in a press release, right? So he knows what he's doing. All right. On that note, that wraps up this week's Fintech Insider News. Thank you so much to today's guests. Where can people find out a little bit more about you and your companies? Maybe let's start with you, Ross.
Sure. Yeah, you can find me, Ross Gallagher, on LinkedIn. If you want to find out more about 11FS, then it's 11FS.com.
Perfect. Tom?
Yeah, you can also find me on LinkedIn. And yeah, if you're interested in embedded finance in the UK, love to chat to you. We're at nwboxed.com.
Fantastic. Raquel?
Yeah, so you can also find me on LinkedIn, Raquel Soares. And you can also find us online at eps.edenred.com.
Fantastic. Thank you. And as for me, you can find me, Laura Watkins, on LinkedIn, on 11fs.com, or on this very podcast. So thank you so much for listening to today's Fintech Insider. If you like what you've heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? And as always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thanks again, and goodbye. Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks, like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.